Hello, everyone. My name is Manan, alongside Nick, Gabriella, and Joe. Today, we at REIC Development are excited to propose our investment strategy for the Southside Commons. Despite its strategic location, the property is unequipped to function successfully due to a lack of proper ownership and financial instability. Fortunately, we have the opportunity to take advantage of this property as it is selling at an attractive price and cap rate. Looking at the location, we observe a population of significant affluence. Wealthier neighborhoods allow for greater leisure spending. Additionally, this Chicago suburb has experienced a strong population growth, and we expect this to remain. A growing population with growing pockets signals future success. The target property has a tactical location which sees traffic in high volumes. Currently, a 58,000 square foot space and 10,000 square foot undeveloped end cap remain. In addition to the Ross and LA Fitness, a bank, Taco Bell, and a few other tenants drive traffic into the complex. Overall, each of these factors makes us confident in the property.
We were presented with three strategic options to add value to Southside Commons. First, to fill it with traditional retail big box tenants. Given the concessions and rent that we'd have to make to attract such a tenant, the returns that we create would not justify the risks associated with this type of commercial real estate. Second, we could repurpose into traditional apartments, self-storage, or another use. However, this would not have synergy with the existing tenants, and given the construction costs associated with this, especially apartments, it would be unfeasible. While self-storage has low construction costs, it would be a blight to the community involvement aspect, which we at REIC Development extremely value. So we chose to go with option 3, a hybrid strategy. Our plan for Southside Commons is a active lifestyle concept that can keep customers in all day long. Start with LA Fitness in the morning, where you can get a quick workout or a long workout in, followed by Sweet Green, a quick service, healthy restaurant concept, and the end cap edition, followed by Ace Pickleball, a good place to catch a game with friends in the middle of the day, followed by Palette Project, an upscale brewer for dinner.
The U.S. is seeing a boom in pickleball, shown by massive growth in 2022 and continued potential reported by USA Pickleball. Composition of our target market and U.S. pickleball players by age follow similar trends, with common ages of players being 18 through 34, followed by 35 through 54. This age range accounts for almost half of Southside Commons demographics. In terms of our brewery, increase in the number of operating breweries year by year shows continued growth and demand, proving them a profitable business. In our market, 24.74% of consumer spending is in food and alcohol. However, only 10.8% of local businesses are there to support it, thus proving of success for our brewery concept and an increase in demand. For our end cap, we chose to fill the space with a fast casual, health-oriented restaurant that supports synergy within the space. We like that Sweet Green has a commitment to being 100% carbon neutral by 2027. Additionally, they show security for future financial growth. With plans for future expansion, they have launched a new infinite kitchen concept in Naperville, Illinois as the flagship. This reduces labor costs and will continue to boost gross profit in the future, as it is implemented in all stores within the coming years with a focus on suburban markets. It was important that all our businesses align with our DEI initiatives. Sweet Green supports and champions farms that are Black-owned and woman-owned. They also promote employee resource groups and ensure that there are POC high within their corporate structure. Ace Pickleball's founding statement reads that they focus on creating equitable play for everyone in the community. Their mission is to provide a space where anyone can enjoy recreational activities. And our brewery pilot project was launched as a space to help support small Chicago-based breweries in an industry with exceptionally high barriers. They offer assistance with product development, production scaling, marketing, distribution, and more. It was important for us to look into feasibility of a LEED certification, as across real estate, it's becoming increasingly important to consumers and makes spaces more marketable for tenants. For Southside Commons development, it's most realistic to be LEED certified with 40 to 49 points earned. Some of our highlights were sourcing renewable energy, easily repurposed space, which reduces construction impact for current and future tenants, and energy metering.
Total cost of the project would be $17.56 million. We feel like given that the property is already in operation, it would justify the land acquisition of almost $13 million. Construction costs for the vacant space would be as follows: $20 a square foot for the pickleball interior build-out, $100 a square foot for the brewery interior build-out, and $300 a square foot for the end cap addition, as well as a 10% contingency. We chose to keep most of the ICSC assumptions in terms of loans and cap rate. However, we felt like given our ESG and DEI initiatives, our property would be better positioned for future investors, especially given the possibility of future legislation in this area. And that's why we justified a lower cap rate of 6.5. Our returns are based on rents as follows. After speaking with developers who deal with these kind of tenants, we felt like the pickleball and brewery concept could support a rent of $11 a square foot, which is feasible given the strong Chicago market, as well as $16 a square foot for the Sweet Green End Cap Edition.
Evaluating differing sales terms, we elected to capitalize on the fashionability of pickleball while synergizing with our own company initiatives. Our short-term turnaround strategy of 5 years allows us not to get caught grazing with the herd and fully capitalize on its returns. Our elected path generated an attractive IRR and equity multiplier, allowing for liquidity to pay investors and to pursue further projects. Given market variation, we elected to perform a sensitivity analysis with changes in cap rate, variance, and expense growth variance, eliciting attractive results across the board. Furthermore, a completion of a SWOT analysis highlighted disposable income filtering into entertainment spending, synergizing with the demand for recreation within Chicago. This allows us to deem that the location of Southside Commons' strengths and opportunities outweigh its costs. As a result, REIC Development views Southside Commons as an attractive acquisition, as it aligns with our company mission, allows for a quick exit, and provides an attractive return for our shareholders. Thank you for your time.